If it's earnings season, it's Rebecca Corbin. Rebecca Corbin, I welcome you. Corbin Advisors, of course.
Rick. Good to be back.
What was the cutoff period for the survey?
Sure. The survey ran September 11th through October 2nd. 79 global institutional investors totaling almost $800 billion in equity assets.
Now, October 2nd, they kind of missed some of the biggest volatility.
Yeah, these are not traders. These are long-term investors. They're focused on the market, and I was sitting in my airplane seat on our way feeling really confident that today would be a rebound.
Did they see anything in the crystal ball?
Absolutely. They took 35% of cash out of the market waiting for a dislocation. I don't think it's any surprise. October is notorious for being extremely volatile. It's the third quarter. We see more pre-announcements than any other quarter, and we've got inflation, input costs, and tariffs.
All right, so rising interest rates has been the theme, and its effects on equities. It's part of that input cost turnstile.
Sure.
So input costs and tariffs, that's their biggest worries.
Biggest concern. I mean, we have had a very strong economic backdrop. We have had great growth from these organizations, okay? They've put in dealing with input costs since January, and they've put cost increases in place. They've been able to keep up with it. Now they're dealing with tariffs. And this latest tariff of $200 billion came in September. Their organizations are focused on making sure that they can do that. It is a heavy burden on these organizations. If tariffs go off the table, I think corporations will sigh a big sigh of relief.
So this is, listen, we talk about the trade wars a lot, but you're really on the boardroom level. This is very interesting. Now, we
had all CEOs.
We had Jamie Dimon today, and he expressed obvious worries as well. You wanted to give an opinion with regard to divining some of his comments.
I agree with him. That's what we see. This is a major concern and something that investors are talking about and corporations are speaking about. And whether or not they'll be able to do that, I don't think we're going to see it in the third quarter. Fourth quarter, I think we're going to see guidance revisions downward, more cautious tone from executives until they work through the price increases, which are probably going to come in January.
So right now, as you see, you're worried about guidance. I understand that. In Q4, might get squashed a bit. But you're optimistic. They're never going to work out all these tariff issues before the end of the fourth quarter, but they could at least give us a buy on all the negative issues while they discuss it.
Listen, I think the market was oversold. We've seen that. There's more room to run in this market. Investors are focused on back half of 2019 for a recession. We still have good growth, but these things are snowballing to some extent, and it's crushing, kind of squeezing the profits that companies have been able to have.
And this is the big topic, earnings compression. So if operating costs get affected because of rising input costs and they can't pass on to the consumer, they have to grow their way out, and tariffs is the impediment.
Well, they're going to have to cut their way out, right? And the next leg, if these tariffs stay and they can't pass on that cost, we are going to look at cost cutting at companies, and that's going to be headcount reduction, and that's what I'm looking for to signal the first signs of a recession.